Hey guys, how's it going? It's Andy from Magoo Investing. Happy Thursday. In today's video, I'm going to be talking about the three most important factors, whether they be just overall information or habits that I've learned that have made me a more profitable stock trader overall. In this video, I'm going to be talking about prospect theory, the way that I record my trades, and the amount of times that I check on my current stock portfolio. In the last video that I made on Tuesday, I'll throw that up right now, I talked a lot about the psychology and emotions behind stock trading. I think it's really important to kind of embrace the emotions of stock trading. People think that it's important to kind of be trading like a robot. You have no emotions because emotions are bad in stock trading. In that last video, I've kind of described why I think it's important to embrace the emotions of stock trading and understand the tendencies that your brain has when it comes to investing, whether it be the emotions of the effect heuristic, which makes it so that when you see things that you like, you're more likely to trust in it. In that last video, I gave the example of Snap earnings, where since I love the company and the product, when bad earnings came out, I immediately thought that, oh, the analysts just don't understand the company well enough. And so in this video, I actually continued to read the book that I had to give that, or I had to write the 12-page paper on and give the presentation on, called Thinking Fast and Slow. And during the further part of the book, he talks about prospect theory, which is actually something that the author, Kahneman, won a Nobel Prize for. And it's really applicable to stock trading because it has to do a lot with risk and reward. Before we get started, I got to say that I'm not a licensed financial advisor, and I highly recommend talking to a professional, someone that can find you the best places to put your money going forward. In addition, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. One of the most common things that people say when it comes to investing is understanding your risk to reward ratio. Currently, from all the experience that I have trading, I've come to the conclusion that 3-to-1 reward to risk, or I guess 1-to-3, is the best for me. And it just kind of makes sense. If you're going to be making money, you want to be making more than you're willing to risk. And the prospect theory from Kahneman is the idea that humans have an emotional response to money. And so if I came up to you right now and said, I can give you $100, or there's a 50% chance that I take $100 from you, I guarantee that most people would not take this bet, even though statistically it is totally even. And so Kahneman describes the emotional attachment that people have to money in making their decisions. You'd be a lot more likely to take the money if it was $300 and risking $100, because your emotional response to making $100 kind of balances out the emotional response to losing $100. This is very applicable when it comes to stock trading. When I look to take a position, my idea of making $300 in relation to losing $100 gives me enough confidence to take the trade. If you look at people that gamble, whether they're playing poker or blackjack, they're just constantly weighing the probability of making money overall. And for them, making 51% profitability is totally worth it for them because they are very good at balancing out the amount of bets that they make. Most stock traders have a hard time balancing the amount of risk and reward. And a lot of people, they have the same position size for riskier trades than they do for less risky positions. And so in this video, I thought it'd be important to kind of discuss the importance of understanding the emotional response that people have in relation to money. When I first started day trading, I lost 75% of my portfolio immediately. And that was just part of the mistakes that I made and something that I learned from. Kahneman mentions the idea of having a reference point as being another important aspect in prospect theory. For someone like me that was trading with $1,000, losing $750 was a huge emotional hit, and I felt really upset with myself for months after that. Whereas I talk about the importance of being risky as a younger investor, because $750 right now hurts a lot for me just because of the amount of money I have overall. 20 years from now, $750 sure will still probably hurt, but it's not going to be the same amount because my reference point for how much $750 is worth to me has gone down. Being in my 20s, $750 is a lot of money. Being in my 40s, $750 sure will still be a decent amount of money, but it won't be as emotionally taxing as it is right now. In addition, he talks about the complete opposite idea of it and ideas that are very risk heavy, something like lottery tickets. People know when they go buy a lottery ticket or a scratch off, they have less than a 1% chance to make money. And so they're more likely to be able to understand the amount of losses when they weigh in how much money they can be making. That's why in the tickets they have these ability to win $50,000 for just $1. You see that amount of payoff compared to the $1 you're making, and you're more likely to take that even though you already know that the percentage that you're going to be making money is so low. But just because you understand that it's a 99% chance you're going to lose money, you're okay taking this very risky action. If it was the other way where you have to pay $50,000 to make $1, no one would ever do that. It doesn't make any sense. It's the idea that if you were going to buy $50,000 worth of Apple stock just to make $1, that makes no sense whatsoever because the amount of risk doesn't make sense just to make $1. So understanding that people have an emotional response to money overall, I think is a really important aspect of becoming a more successful trader, and is probably the biggest lesson that I've learned in my experience from day trading. I started out being a 1-to-1. I tried to think like a robot. I was like 1-to-1. If I can get a little bit better than that, that'll be profitable for me. However, emotions are a huge part of stock trading, and that's why I've kind of settled on 3-to-1 as being the best for me right now. The next thing that I want to talk about for being very helpful in my process of being a more profitable stock trader comes from my trade journal right here. And it kind of seems weird, I'm a 23-year-old man, I'm writing in a journal almost daily. But the importance of this is I see the past trades that I've made and I try to learn from them. When I go to the very beginning of this trade notebook, it kind of hurts me to look at them because this is when I was day trading and there are some really huge red flags in here that I don't understand how it took me so long to learn these lessons. Monday, August 13th, I traded JNUG, which is the gold ETF. I lost $11 on a $100 trade, not very good. And at the bottom of it, I wrote, "Stop being a follower, trade on your own emotions." Basically, I saw people that were trading it making money and I hopped on the bandwagon. I made a mistake from that. This continues if I keep looking over here. There are plenty of other examples of here I made a trade, worst trade of my life, bought and sold within an hour, end of the day losing 10%, missed out on 4% profit. So just the idea that going back and looking at these trades, I can learn something from it, hopefully. So now that I'm past day trading, this journal is a great way for me to remember the mindset that I was in when I took a position. Currently, I have PayPal up right here. I bought one share at $105. I wrote that I love the company, want to buy some more, but it may not be the best opportunity. Wait until it falls to buy more. And this gives me a great reference point. If something happens and a news event comes out, instead of emotionally trading the stock and buying in at a higher price, I can come and look at this right here and understand that in the past, I thought that this wasn't a great deal, so I should wait. And it's kind of reinforcing the overall trades that you make to make sure that you don't make a rash judgment and take a position in something that you're probably going to end up regretting. Another example of this is with Snapchat. I wrote, think this position could double in 2020. It's a risky position, so don't take too large of a position size, hoping to see positive earnings in 2020. Buy on further drops. So this gave me the reference point that when they missed earnings a couple weeks ago, it told me that, hey, you know what, I should probably buy more, because in the past, when I had a very neutral frame of mind, I thought this was a good opportunity. And so instead of seeing that news event and being really upset that I still own it, I think of this as a good buying opportunity because I can go back and see my prior train of thought, which I think is a really important factor of being a profitable stock trader. Learning from past experiences and using those past experiences to influence your further trades makes it so you learn from your mistakes and learn from the good trades that you make and the mindset you were in when you took those trades. And finally, the last thing I want to talk about for something that made me a more profitable trader is the fact that I no longer obsess about my profit and loss every day. When I first started trading, the idea that my money, the theoretical money that I had, was changing every second was something that gave me a crazy rush. It's part of the reason why I got into day trading really early on, just because that rush, which now I know is the rush of gambling, made it really attractive to just kind of watch how my money was changing over time. As I've started to slow down and be a more long-term trader, I've started to look at my profit and loss a lot less. At this point, when I was working on writing my really long paper, my research paper, I didn't look at the stock market once. And that's because I didn't have as much of an emotional attachment to the profit and loss. I was confident in the trades that I've been making, the setups that I'd seen that I wrote about in my trading journal. I didn't have that obsession of looking at how my stocks are doing every single day. And I think that not obsessing over your profit and loss and checking on your portfolio every day, I think is a good thing to learn. You have to trust the fact that there's going to be fluctuations up and down every day. But by overanalyzing every day's movement, you kind of can cloud your judgment and make really rash decisions that probably aren't the best idea for you. With how volatile the stock market's been recently, if you hop on to the computer one day, you see your stock's down 2%, that's a reason why you might want to end up selling your position because you think it's going to continue to fall. This is why I really advocate setting alerts on your trading platform, just so you don't have to obsess about how the charts are moving every day. If you get an alert, you can hop on there and reassess the situation. It's a lot better than having to watch your charts every day. And in my experience, if you don't have levels set up already, you can make judgments just on the fly just because of the emotional response you have. And so setting these alerts and charting out these zones makes it so I don't make a really rushed decision on what I want to do with the stock. Most of the times when I get an emotional response and I end up selling or buying a stock, I most of the time end up regretting it. So setting these alerts, not checking my portfolio every day has been very beneficial in making me a more profitable stock trader overall. So let me know what you thought about my list of the top 3 things that have made me a more profitable stock trader, and let me know in the comment section down below what do you think I missed, what you do that you think makes a huge impact on your trades overall. Let me know in the comment section down below. Thanks for watching this episode, and I'll see you in the next video. Thanks for watching.